And welcome to another episode of the Capital Gains Tax Solutions podcast, also streaming on expertcresecrets.com, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit your highly appreciated cryptocurrency, primary home, investment, real estate, or a business. I'm your host, Brett Swarts. In each episode, I am joined by some of the best wealth, financial, business, and real estate minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited to chat with my next guest here. He's a repeat guest, and he's becoming a friend and a strategic alliance, and he's a certified financial planner and a 3-time #1 best-selling author, and the owner of Lake Growth Financial Services, a financial firm in Chicago, Illinois. Over the years, he has helped hundreds of his clients take back control of their financial future and build their business with proven tax-efficient financial solutions. He specializes in building custom-tailored financial strategies that are unknown to the typical stock jockeys, attorneys, or other financial gurus. He's also the host of the Not Your Average Financial Podcast. Please welcome to the show with me, Mark Willis. Mark, how are you doing, sir?
Hey, Brett. Great to see you, man. How are you?
I'm doing fantastic. I'm excited to dive in and spend some time with you again with my audience. We're going to be talking about some actual deal stories from the last episode where Mark was talking all about the three secrets to infinite banking system, okay, using whole life insurance. You can go back and check that out on iTunes, as well as on Spotify, as well as on YouTube. I always recommend the YouTube because you can see our handsome faces here and really get to dive in on the video. So again, the 3 secrets to infinite banking system, that was aired about 7 months ago, but now we're going to be talking about, banking on yourself again, but more also actual deal stories, client deal stories that folks who took action when they heard the episode. And so that being said, Mark, do you want to give our listeners, getting to know you for the first time, just maybe the 2-minute version of your story?
Sure. Well, okay. So, and first of all, speak for yourself on the handsome face thing, man. You might have one, but I'm still just trying to keep up with you. That's all. So happy to connect with you and your audience again. It's been my pleasure to work over the last 11 years with clients all over the United States and Canada, and honestly, throughout the rest of the world too. There's ways in which I've been able to partner with folks in many countries, but we work virtually and over the phone with folks to help them become their own source of financing. I've become more convinced as a certified financial planner over these last few years, especially in the last year in particular, that being your own source of financing matters more than the rate of return you got on your mutual funds last year. In fact, it matters more maybe than almost any other part of your financial portfolio. I liken it to the headwind coming right at you. If you're trying to fly an airplane that can maybe its engine can push at 100 miles an hour, but that headwind is coming right at you at 300 miles an hour, there's no way, no matter how hard you push that little plane, it's going to be moving in the wrong direction. And that headwind, for most of us, is the amount of mortgage interest and debt that comes with our real estate deals. Because even though we might be, cash flow positive on our deals, very often the bank is the one that makes off with the biggest winnings. They have very little, if any, skin in the game, and they're welcome and happy to take your monthly mortgage payment every month. And so if you can land the plane and then actually get a tailwind, which means becoming your own source of financing, your own mortgage company to your deals or yourself, not just for your real estate, but for every part of your financial life, it changes everything. And so that's what we've been privileged to help our clients do.
Fantastic. So let's dive in right into a couple of recent case studies with, again, actual Capital Gains Tax Solutions listeners who took action. So let's start with the first one, Mark. Without giving any names, just kind of tell the story and what the challenge was and what you were able to help them achieve.
Well, yeah, sure, yeah, and for your listeners, I want to say, I think the world of the people who've been willing and ready to take action. fine to hear another podcast, watch another YouTube. But those that took steps to improving, my utmost respect to them. One person in particular, very, very successful professional, white collar professional, was very interested in doing some deals and saw the kind of the inevitable tax that would come with having some success in real estate. And so this person reached out to me, and we had a discussion. And I'll just say this up front. He already had a whole life insurance policy from an insurance agent that had set something up for him roughly 7, 8, 9 years ago. And it was even with a company that I had been aware of and understood, but it was not designed properly. And the policy was going to become taxable in just a few more years. And the amount of debt that was accumulating on that policy was so massive that it was costing this person almost $6,000 a month just to service the interest on the loan. So I better back up for just a quick minute and explain what is Bank on Yourself and how can it go wrong? That wrong. So it's a whole life insurance contract. The cash value on whole life insurance typically is $0 on old-fashioned whole life insurance. But if we can design it correctly, if we can minimize the commissions and minimize the insurance expense, then we can just massively overfund the policy and have tons more wealth in the policy on day one. In the first 30 days, you can typically see somewhere between 8 and 40 times more cash than the old-fashioned whole life that Dave Ramsey loves to hate on. So if it's designed correctly, it builds guaranteed on a guaranteed basis every year. You have liquid access to that money with no taxes due. You can usually borrow against the policy. And if it's designed the Bank on Yourself way, it will continue to grow as if you had not touched the money. And right there, that's the sweet spot for a lot of folks, a lot of the real estate investors. When I use any other asset, savings account, brokerage account, CD, money market account, self-directed IRA, whenever I use my assets, I liquidate that asset and I can no longer get compound growth. I can either choose compounding growth or I can liquidate my money. I can't have both at the same time with most financial vehicles. This policy allows us to do both. It's liquid access to money and continuous compound growth.
Excellent. Okay, so this gentleman had a poorly designed policy, and he was having to service $6,000 of interest on the loan of this policy. And so, talk us through how you were able to design and transfer or move or start a new one there.
Yeah. Okay. So it was $6,000 a month, and for him, that was a lot of money. That'd be a lot of money for anybody. $6,000 a month just to service the debt. And remember, these are policies that do have policy loans on them, and the loan interest is an interest rate that's typically well below market rates if it was designed correctly. Typical annual percentage rates on these life insurance policies at good companies, let's say over 4 years, might be an APR, annual percentage rate of maybe 1-2%. But this loan had ballooned to such a degree and had such poor financial planning and coaching around it that it was really just becoming onerous for this client. So anyway, he reached out to me and said, Mark, I'm familiar with infinite banking, but what is Bank on Yourself and what makes it different? And so we talked about how it comes with there's only 200 Bank on Yourself professionals that have gone through the credentialing process to become Bank on Yourself professionals in the United States and Canada. We talked about how management of the policy and the design of the policy was, unfortunately for him, poorly designed. So it's not unlike any law contract. If you poorly design a contract, it can really mess you up. So my thought was, what can we do? We've still got several $100,000 in this policy that has not been loaned out. So what we were able to do after having a more in-depth financial consultation, not just selling an insurance policy, but having a true financial plan, a discussion, a financial consultation with this client, we said, all right, we're able to move over the money through a 1035 exchange. Does that sound familiar, Brett? A 1035 exchange, sort of like a 1031 exchange for real estate, but there's a part of the tax code called the 1035 exchange, which gives the policyholder the ability to, in a tax-free manner, transferring the cash value of life insurance from an old policy to a new one, usually with very little, if any, expenses to do that. So that's exactly what he did. He transferred over all of the tax-free money out of the old policy. The loan was wiped clean. He takes what he hadn't borrowed out, brings it to the brand new policy that we were able to set up correctly for him. And now he's off to the races. He's got a massive amount of money that he can be borrowing and using right away. And that's just part one of the story. There is a part two, but I better hush for a minute, Brett. Any questions or comments on any of that? And forgive me if you're saying things, I'm not hearing you. You might be on mute just for me. Can you hear me?
Back now, yes.
Oh, okay.
Thank you so much. Sorry about that. He did a 1031-5 exchange from cash value to a new policy, which able to restructure the debt or pay off the debt. So eliminate the $6,000. Is that the first thing? Yes.
Yeah. There's about $1 million, $1.2 million of loan that's just gone from his balance sheet. Yep.
That's pretty sweet. And then obviously it probably lowered some of the the value of the insurance, or right? Because I mean, it's got to come from somewhere, right?
Yeah, the death benefit for him was an afterthought in the first place. He had other assets and other things, but for him, we're able to minimize the death benefit as much as he wanted, give him what he needs, of course, for life insurance purposes. But yeah, the goal was to massively overfund the policy through a little known rider called a paid up additions rider, and have as little expense on that policy as possible. So we did. We dropped down the death benefit from like $3 million to say 1.5 or whatever million bucks. And for him, that was sufficient.
Perfect. Yeah, that's great. Basically give him what he needed at this point in his life, as well as get rid of what was the pain of the $6,000 in debt service every month, right? We're in the business of solving problems, not in the business of even selling life insurance or tax deferral strategies or real estate, right? He was solving his problem, and the tool was the bank on yourself strategy. Is that a fair summary? That's
correct. Yeah, that's right. That's part one. I can give you a sneak peek into part two, and you can let me know if you want to go there.
Sure.
Okay. So very briefly, he's not done yet. He expects there'll be more deals. His plan is to borrow from this new policy and to smartly pay it off. That's the key. We've got strategies for doing that and so forth, and software and tools and coaching and 6-month reviews and true financial planning that comes with working with us. And again, I'd say you want to make sure the policy was designed by a bank on yourself professional and with a company that's approved by Bank on Yourself. It's the difference between an all natural grocery store item, granola bar, whatever, and a USDA organic. We only know the qualifications and certifications for USDA food, right? USDA organic means something, but all natural can mean anything at all. So we went with the correct design, but here's where it gets really interesting. So as of now, he's actually got his policy, the new policy, and some deals. Those deals are coming due, and he has some other syndications that are coming due. And his plan and goal, and rightfully so, is to start new policies inside his Deferred Sales Trust. So the DST actually now will hold some life insurance. It'll hold some policies that can then provide for him more and more liquid capital for even further deals, whatever he decides to do within the DST, through your guidance and support, obviously, Brett. And now the policy inside the DST can be a part of the capital acquisition and management of assets, and of course, receipt from windfalls inside the DST. And then as he wishes, he can take the money out of the DST through your support and guidance, of course. And among those assets is the life insurance. So among the real estate that comes out of the DST with the tax advantages that you offer, the life insurance too comes out with some tax advantages. And finally, if there's any, and you'll have to help me on this part, if there's any estate tax due upon his passing, the life insurance could even liquidate that estate tax. So let's say that that Congress gets their way and the United States gets their way, and they burden us with some further estate tax, or they lower the threshold of the estate tax exemption. Life insurance counts toward your estate, just like real estate and other things would. And then it shields you from having to sell that real estate. So the life insurance for this client or anybody who would work in setting these policies up can act like a shield against any estate tax obligations. So it's an incredible way to be able to avoid the sale of real estate, a fire sale after you should pass, by being able to use the life insurance death benefit to pay the estate tax. Let's say that this person owed, give me a number, $1 million of estate taxes due. That could be possible depending on the net worth at the person's passing. And in this case, the death benefit would be more than $1 million to be able to pay that to be able to pay that estate tax. And Brett, that would allow him to keep all of the real estate or any other asset he wishes to keep without having to sell it to cover Uncle Sam's demands.
Yeah, that's really powerful. That's really powerful. And then there's also something called a separate one. It's called a DST plus for ultra high net worth individuals, where we just actually take it out completely outside the taxable estate upon closing. But that is really, really cool and really fascinating way to design and build more wealth using life insurance in the deferred sales trust. Okay, awesome. So now, is there anything new, Mark, that you're seeing out there that you might want to touch on, or some trends, or since we talked 7 months ago?
Sure. Well, I mean, trends-wise, we've seen quite a bit of spending in this country. I think I heard that 40% of all the United States dollars that have ever been printed were printed in the last year. 40% of every dollar ever printed in the last year. That to me is an incredible fact. And, if you take out rent, owner's equivalent rent out of the CPI, we've had a 25% inflation in this last year. And, you can dither over what is owner's equivalent rent and does that even mean anything? But even if that's half true, even if we have only had a 12% overall inflation in this country, that's an incredible number that isn't going away. It's not like we're going to have negative 12% inflation next year to make up for it. So we have some massive increases in the cost of living, and so we have to discuss about what that actually means and how we can guard against something like that. Now, so that's been a lot of what we've talked about with our clients, and I'll mention quickly that life insurance specifically has an interesting component to it. It's not tied to the CPI in any kind of direct way, the inflation rate in any kind of direct way. However, when have we gone through periods of high inflation before? Let's see. The early 1980s, there was some pretty big inflation. In fact, some of your listeners might remember mortgages at 14, 16%, 18%. Well, just so happens I have some history of dividends off whole life insurance contracts from the early 80s. And wouldn't you know, in 82, 83, 84, some of these major mutually owned life insurance companies were kicking off dividends 12, 14, 18% in those years. It's really wonderful to see the kind of protection that comes against massive inflation. I can't say we're going to be, avoid the fate of, Zimbabwe or Weimar Republic Germany or whatever, but as long as we have a predictable inflation rate, we're going to see dividends keep up with inflation. In fact, if we start to see inflation go up, or if we see mortgages back up at 6, 7, 8, 10%, Brett, I'm telling you, the party's going to be at my house and you're invited, because that means all of our dividends are going up too.
Excellent. Okay, so it's direct correlation. As the interest rates go up, there's better payout for life insurance, I think is what I gathered there. And obviously with inflation, 40% of all the U.S. dollars printed over the last year that's ever been printed in the history of the U.S., that is staggering to say the least, and kind of scary, and curious on where we're going to be in 6 or 12 months, right? 24 months.
Yeah.
At a certain point, the cotton candy, right, and all the seems like it would catch up to us. I don't know, but that's for smarter people maybe to figure that out. Okay. Anything else? Any other thoughts on that, or anything to add?
Well, there's another financial strategy I thought I'd leave your best listeners who stay to the end. I might be able to give this little concept that's been really incredibly powerful for a lot of folks. In fact, some of the clients that have reached out to me from our last interaction, Brett, would you want me to dive into that?
Yeah, sure.
Okay. All right. So this is going to take a little explaining. So I'm going to try to do this as quick as I can. But a lot of times clients will come to us and say, Mark, I have $1 million, or I've got, $2 million or $800,000 or whatever their number is. And I don't want to just drip it into a policy. Most whole life policies, if you want the tax advantages, need to be funded at some sort of rate over some series of years. Typically 6, 7, 8 years is pretty common. And there's obviously variations there. And there's even ways you can put in a single lump sum, and that's it, into one policy. Just drop it in, boom, and it's done. It's called a single premium policy. But that loses some of the tax advantages when you do that. I won't get into all the details unless you want to, Brett. But there's a way that we've been able to find that's been incredibly powerful for helping people, one, fund a policy that keeps the tax advantages, stays on the right side of the tax law, and then two, creates for them a guaranteed income that they cannot outlive at the same time. So it sort of solves several problems all at once. Essentially what we do is we take the lump sum that they would like to put toward the policy, $1,000,000, and they put it into what's called a fixed indexed annuity. A fixed indexed annuity. Typically it needs to have an income rider, and it'd be great if we could get this fixed indexed annuity to pay out increases to keep up with inflation in the future. Now, again, without going too deep into the weeds, an annuity is essentially a stream of income that you will never outlive. It's like a private pension with yourself. It's like mailbox money. It's like getting paid every single day for the rest of your life. Annuities are as old as Jesus. They're 2,000 plus years old as the Roman Empire. But the more modern annuities these days stay liquid. The old-fashioned annuities, the insurance annuity company would keep all your money. You give them $1,000,000, you die the next day. Whoops, worst investment you ever made if you died the next day. But with these new, more modern annuities, the money in the annuity is still available to you. So what we were able to do with one client was we put $1,000,000 into a policy, and then we were able to withdraw 10% a year out of that annuity, so $100,000 a year, to drip into a policy over a 10-year period. Meanwhile, the annuity grows alongside the market. So if the market went up 12% or 10%, then the indexed annuity would track that. Maybe it would do 7%, 8%, whatever. But if the market should fall over this 10-year period, the annuity is protected. It won't lose a penny. It stays put. And then it resets the next year. So if the market rebounds, then you get to pick right up where you left off. As I say, zero is your hero. You can really expect that this money will be safe when the market crashes, and you get most of the upside when the market goes up. So this is not a universal life policy, an indexed universal life policy, because there's some internal expenses of universal life that I would probably stay away from. But a fixed indexed annuity does not have all this insurance expenses and so forth. So that kind of is the kind of phase one of this strategy. So we're dripping money in from the indexed annuity, and it's funding the life insurance, which stays liquid, and we can use it for deals as we go. But the fixed indexed annuity by itself is continuing to track alongside the market. Any thoughts on that so far, Brett?
My brain is, I think, catching some of it. I might have to rewind it and catch it again, but it sounds pretty awesome. By the way, you can go to bit.ly/boy real estate to learn more about this and schedule time with Mark. He'd be happy, and or his team, to kind of dive into your particular situation. That's bit.ly, bit.ly, if you will, /boy real estate. So very interesting, fascinating, and then love to see a like a case study, right? And maybe there's something on your website there where you can kind of break that down, and kind of show that on paper. I think that'd be really helpful. Do you have something like that, Mark, on your website?
Yeah, guys, if you want, you can go to our you can reach out to me. Go to that website that Brett already mentioned, bit.ly/boy real estate, and you can find out all about this. But if you want to see an example of this and a case study of a real life person, his name's Tom. We were able to help him, his let's just call him Tom. It's not his real name, but we call him Tom on our podcast. And we do a full breakdown of Tom's concerns and the steps that we took. We transferred $750,000 from his IRA into one of these fixed index annuities. The annuity then funded the life insurance. And after 10 years, not only did he have a massive death benefit, a big pile of cash value that he could take out tax-free for the rest of his life, but his income off his annuity was another, $73,000 a year. Plus he'd have Social Security on top of that with no taxes due. So it's a pretty cool strategy. If you find the time, go listen to our podcast. It's at Not Your Average Financial Podcast. Scroll down to episode 172. It's back in December, but that's where we really dive into this example and give everybody as much detail and as transparent as we can make it.
Awesome. You ready for the lightning round?
Let's make it happen.
All right. So knowing what you know now, if you go back to your 25-year-old self, what's the one golden nugget make sure to tell yourself to do?
Man, stop paying off your debt the old-fashioned way. Don't do the snowball method. Whatever you do, don't listen to Dave Ramsey. He doesn't have a corner on truth.
Got it. Number two, what's the thing that you're most curious about right now?
I'm really loving the there's a book about a spy that I'm really reading right now, and I really am getting really deep into like KGB spy novels, and it's just kind of cool. I've never really done anything like that. I'm very rarely get into like nonfiction spy history stuff, but it's pretty cool, and so I'm really curious about kind of where it's headed. Um, Twists and turns. The best fiction is real life history, as they say.
Love that. Yeah. By the way, the show The Americans is a pretty cool one too. If you're into that thing,
Cool.
type of KGB slash Cold War stuff. Question number three: what's the number one book you've recommended or gifted the most in the past year?
There's a book. Well, guys, if you have never heard of Bank on Yourself, got to check out The Bank on Yourself Revolution by Pamela Yellen. Great book. Outside of that, as far as what I've recommended, check out The Road Less Stupid by Keith Cunningham. Super awesome. Like the book of Proverbs for business, basically, in the 21st century. Great,
Awesome.
Great book.
Awesome. Last question for those who want to get in touch with you. Could you mind one last time where to meet you, Mark?
Well, yeah, go to bit.ly/boy real estate. And that's the best way to reach out. You can get a download of kind of our concepts, philosophy. You can find my podcast. You can reach out and have a 15-minute call with me, and make sure to mention Brett's name, and I'll know where you came from, and we'll have a good conversation.
Yeah, thanks, Mark, for being on the show. We'll have you again here, not in the too distant future. And I want to thank you also our listeners for listening or watching another episode of the Capital Gains Tax Solutions podcast, also streamed on Expert CRE Secrets, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit your highly appreciated business, real estate, cryptocurrency, save a failed 1031 exchange. Also, you can defer tax and create more wealth. Perhaps you can have more wealth to be able to buy some life insurance that you might very well need. Okay, so we want you to go to capitalgainstaxsolutions.com if we can help you clarify the Deferred Sales Trust. Get with Mark Willis if he can help you with the life insurance. And we want you to please share, rate, review, subscribe. We so appreciate everyone out there in the iTunes world, Spotify, YouTube. Thanks so much.